MP Materials is one of the two large producers of rare earth metals outside of China, with the ticker MP, listed on the New York Stock Exchange and a market cap of around $10 billion. In this video, we will review the rare earth metals markets, the geopolitical tensions there between the United States and China, as well as the investment fundamentals of MP Materials, whether it's worth taking a position in or not. The rare earth elements or metals consist of the 17 various materials on the screen. They're used to create a variety of different crucial products, aerospace components, superconductors, batteries, magnets, nuclear reactor control rods. It's obvious why we need these materials. The problem? China dominates the production of these metals. The entire supply chain is controlled by the Chinese. China produces around 60 to 70% of the supply of these critical resources, and the country owns an even larger percentage of the refining and processing capabilities. So the West is dangerously dependent on China, who can shut off exports at any time, as they have for some of these materials in the past. Just a few months ago, China imposed export restrictions on 7 medium and heavy rare earth metals. This was the cause of tense negotiations, as China has essentially been holding the global economy hostage with its near monopoly over these industries. Inevitably, neither the United States or China can afford to let restrictions like this last for very long, so they did end up reaching a deal to mutually roll back retaliatory trade actions. So China will resume supplying these rare earths to the West again. But these tensions have made it clear that the United States is vulnerable. So we've been making investments to increase production outside of hostile nations like China, and that's where MP Materials comes in. And this is exactly why the US Department of Defense just signed a multi-billion-dollar commitment deal with MP Materials for a magnet production facility in the United States. This includes pricing floor guarantees when buying the magnets or the alloys, an offtake agreement, and a $400 million investment in MP's stock. As of July, the DoD is now the largest shareholder of the stock, holding 15%, and that magnet facility is expected to be completed in 2028 and will be under construction. So the United States is clearly committed to developing new domestic rare earth manufacturing capabilities, and this trend is what makes MP such an interesting stock. The company's central goal is to become a scaled and vertically integrated rare earths producer, operating across the entire supply chain from mining the metal to producing finished products, aka the magnets used in munitions, electric vehicles, and more. The company operates the Mountain Pass Rare Earths mine in California, situated in the Mojave Desert. The mine was previously owned by Molycorp until MP Materials took over control in 2017. MP bought the mine out of bankruptcy for $20 million, and since it has upgraded many of its operations and equipment, since the mine has been in operation since the 1950s. Since there are 17 different rare earth metals, all of them with different supply and demand fundamentals, it's important to know which metals this mine tends to find. The best approximations I could find were from the 1980 estimates, so it may have changed slightly by now, but this is the best I got. The mine is incredibly high grade for a rare earths deposit, meaning how much ore can be found in the rock on average. The grade of the ore body at Mountain Pass is approximately 6 to 8% total rare earth oxides, or TREO. That is significantly better than most of the other global deposits, which typically range from 1 to 2%, if not lower. Grades continue to decline around the world, as we've already mined out a large amount of the high-grade deposits in the past. So this is a great deposit numbers-wise. Estimates from the 1980s tell us that the approximate percentage of the rare earths in the mineral body are as follows. Cerium is 50% of the TREO found in the mine. Lanthanum is 34%, neodymium is 11%, praseodymium is 4%, and all the other metals are around 0.5% of the ore or less. While many of these metals are valuable, our focus is primarily on the neodymium and the praseodymium, or NdPr, because those metals combined are used in the magnets that the company plans to produce as part of the Department of Defense investment. The production ramp-up of the Mountain Pass mine was laid out in a 3-stage plan. The first stage was mining rare earth concentrate at a majority rare earth oxide content. All that ore was originally being shipped to a Chinese company, Shenji Resources, which is actually a minority shareholder of MP, and those metals were being separated in China so they could be sold, but those shipments have now been halted, so revenues will temporarily decline as MP is building out their own capabilities to separate those metals. And their goal was to mine 15,000 metric tons of rare earths from Mountain Pass per quarter, which they're getting relatively close to doing, with 12,000 being produced in Q1. The second stage was creating midstream operations to separate and refine the rare earths themselves, which is now being done for the NdPr oxides for magnets. and their annual production target is to output 6,000 metric tons of NdPr oxide. The third and final expansion stage is underway, taking that NdPr to produce neodymium iron boron alloy for magnets, which they will be manufacturing in-house at a facility in Texas and another one that's being planned right now. MP has already started delivering NdPr oxide and is expected to start producing finished magnet products by the end of the year. The initial facility, called Independence, will target a production capacity of 1,000 metric tons per year of magnets. The 10X facility, which they've yet to determine a location for, will be much larger, increasing production capacity to around 10,000 metric tons per year, and that's estimated to begin commissioning in 2028. Transitioning from the lower end of the supply chain, just selling that raw ore, to selling refined products like magnets makes MP more interesting. They can probably receive higher margins depending on how things play out, especially when they have a pricing floor from the Department of Defense. When it comes to partnerships, MP has obviously been making strides with the DoD, since securing a rare supply chain is a matter of national security, but they also have made separate agreements with both General Motors and Apple. General Motors is an off-taker for alloy and magnets from the initial Independence magnet facility, and Apple has also partnered with MP in a $500 million deal for magnets from that same facility, and establishing a supply chain for recycling old magnets at the Mountain Pass mine. Further emphasizing this company's importance, they are now working with high-profile companies seeking to localize the supply of key materials. Now, MP has also signed an MOU with the Saudi Arabian mining company Ma'aden, the largest mining company in the Middle East, owned by the Saudis. They're going to work on developing a rare supply chain within Saudi Arabia itself. So those could be some valuable joint ventures to establish another potential source for supply from a friendlier region than China. In terms of valuation, significant growth is likely being priced in at this point. Going off their slides, they were estimating at least $650 million in EBITDA when Independence and the 10X magnet facilities were up and running after ramp up. So that would be in 2028 or 2029. There will likely be additional growth opportunities from now until then, but going off today's market cap of around $10 billion, the enterprise value being pretty similar, so they have an EV to EBITDA of 15x. And that's based on projections for several years from now. What multiple MP Materials deserves, who knows? Your guess is as good as mine. This is a pretty unique situation. We're talking about a producer that mines around 10% of the world's supply of some of these critical metals that are important to a variety of supply chains, located entirely in a safe jurisdiction in the United States. If you know about any comparables like that, then feel free to post about it in the comments below, but I do not. Lynas Rare Earths, the other large rare earths producer outside of China, is trading at quite high multiples. They're not generating very high profits yet either. But your standard mining company like Rio Tinto or Barrick Gold trade at an EV to EBITDA multiple of around 5 to 6. So yes, MP is a unique situation, but it's not so cut and dry whether you should be buying the stock or not after it's increased dramatically. It could continue to do well, of course, but the stock has already doubled in price from when I made my video on the rare earth mining investment options back in June, just a month ago. Talking financials, things are going to take a bit of a downturn. As I mentioned earlier, MP's ceased all shipments of rare earths to China for processing, so they have to ramp up those operations on U.S. soil. But before that even takes effect, we have the results from the first quarter of 2025, where revenues were about $60 million. After you account for cost of sales, SG&A, as well as depreciation, depletion, etc., MP was operating at a loss. Total operating expenses came in at $95 million, and that resulted in a net loss of $22 million for the quarter. It seems like financial results will be shaky until they start producing those magnets in large numbers, but that's why they have a solid balance sheet. Total cash reserves and short-term investments added up to $760 million in the quarter. That does not include the recent raise that MP just did. On July 17th, MP was taking advantage of the run in the stock price to raise $650 million through a public offering. A great idea in my opinion, considering how much the stock has moved, but dilution risk is still high as MP is using that stock price to fuel expansion. Granted, the dilution is not going to be too high considering stock prices run up substantially, but the total liabilities for the company are at $1.3 billion, most of that being long-term debt at $850 million, which is maturing years from now. So the company's doing quite well when it comes to the balance sheet. They have numerous sources they could receive funding from, whether that be raising money from the market or receiving funding from several different partners. And MP is also going to receive $1 billion in a committed financing facility from Goldman Sachs and JP Morgan, which should fund all planned capex for that 10X magnet facility. So that's good to hear as well. With all the positive aspects of the business being said, they have a lot of momentum on their side, great growth prospects, but I think the valuation is getting extended here, as it likely already was before the stock jumped 100%, since I talked about it 1 month ago. Does that mean the stock won't move up even higher? Certainly not. We're talking about a strategic asset, getting government support, and a significant amount of news coverage. So of course the stock could keep climbing, but I think it's risky to say that MP Materials is a no-brainer buy at a 10 billion market cap. We're pricing in years of growth, even if we assume they'll trade at a far higher multiple than the industry standard. We've seen with the nuclear energy stocks that valuations can get out of hand for years and stay that way, but on the flip side, if we see the stock market start to drop broadly, then an unprofitable mining company with significant capital expenditures is probably not going to perform very well. So these situations are things I just tend to avoid personally, but deciding what investments to buy is, as always, up to you. If you would like to learn about other investment opportunities in green sectors, then check out my newsletter on Substack as well. Link in the description. Thanks for watching.